Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Reviewing yesterday's action, we saw the markets come in weaker than expected. We actually printed on the market grid an S2, and the market found substantial support as it was responding to some positive news that came out, which I'll talk about here in a minute. But we traded all the way through the RXT number, which is the extreme projection for the day, and closed above that. And this has signaled a short-term sell signal, which I'll go through in the technical section here in a few minutes. Yesterday's action was driven by the unemployment claims number, which once again came in better than expected. I know you're tired of hearing that, but that's what's going on as we look back on these numbers. It came in at 1.8 million instead of 1.4 expected, and the number that I discussed last night that I said was going to be important was the continuing claims, and they came in at 16.1. So all of this was perceived to be bullish. It also sets the tone as we're coming into the employment numbers, which are expected to show 2 million reclaimed jobs and the unemployment rate to come in at 10.5%. I'm expecting to see even a revision or some kind of games being played with these numbers to make them also look better than expected. The question is, how will the markets respond to this? It depends on the numbers that come out with. You can raise the BS flag whatever you want. A perceived positive news story will trigger algorithms and market participants to be reasonably positive because of them. That is how this market's functioning right now. Because this is a Friday close and it's one of the most important closes to me and the models that I run, this will affect the outcome of our intermediate models. A close above 32.20 will be enough to keep us positive. Overnight, we're seeing some moderate protection taken. I think folks are just coming in a little bit cautious because we saw that ADP number come in at 166, and the revision is what made that report better than expected. As I've been discussing over the past several days, this is the theme that I think we're going to start to hear as we go forward. The expectations are going to be missed, and then the revisions are going to try to fill the gaps. Ultimately, as we go down the road, we get into September and October, those numbers are going to be tougher to get revisions because I think we are going to see some flattening of the economic situation. Now, there's still plenty of other things going on. We have the stimulus bill going on that they're trying to pass, and I continue to warn you that whatever stimulus bill comes in, that the Fed is going to do some matching program. They're going to extend, they're going to expand, they're going to do something that will match the fiscal response with the monetary response. These folks are working together. This is a team that's not independent. They are working together with the government to engineer us out of this situation. There's plenty of folks out there out of jobs. I've talked a lot about the displacement of certain levels of the economy that aren't going to be replaced for a while, if ever. So we're seeing this more and more movement toward universal income. There's actually a couple cities that are trying to get universal income. While I'm not necessarily in agreement with that, there is an issue here that these jobs aren't going to come back. You don't want to have an element of society that gets so desperate that they're going to do some crazy things. We've already seen a lot of things on the streets that calmed down a little bit, but the unrest can just flare up again. That could even cause more concerns as we go forward. But from the market standpoint, what we're likely to see over the next several weeks is a stabilization. I've talked about this being a sloppy week. Well, it ended up to be a straight up week. We actually haven't had a downtick. As this market's moved up, we've actually went to the extreme projections that came out of last week's market grid. There's just a lot going on. The database is rotating. There's a lot of other things to talk about tonight. Let's go ahead and take a look at the charts and get an idea for how this week is going to close out. Reviewing the WaveTech database, once again we have seen a substantial amount of buy orders coming in. There were a total of 584 buy orders. There were some sells. You can see over on the right here that the sentiment is positive on 1.2 and bullish on 3.2. What these ratios are how many buys versus sells. There's 2.9 more buy signals than there are sell signals, which is puts it into a bullish mode. Anything over 1.5 is a bullish ratio. It continues to move the percent bullish on the daily higher, 78.93. As we review the weekly market summary, it is at 65.66%. Now, normally, in a very strong market, this will get up to around 72 to 78%. It's going to be interesting if we close above that 32.20, which I'll cover the details here in a minute. We get a close above that level. That's going to set the tone for further expansion in the intermediate database. As we come into the end of the week, let me make a contrast between these intermediate trades and the short-term trades. Over on the positions overview, there's an average of 206 days. Those are trading days in a signal, which tells you that that's the better part of a year. There's roughly 220 days in a year. As we look at those numbers, it tells us that there's a longevity of a trend that's unfolding. Now, there are right now 10,862 total trades on in this database. This is actually a really big number, that 65% of the stocks are in a trend mode, and they're not likely to go away. Not every signal that has been issued is going to work out, but 60 to 70% of them have a high probability of actually earning a profit and generating some rate of return. As we look at the optimized weekly, we look at the current durations. The average duration is 31.38 out of 206. So there's 180 days roughly ahead. Now this number never gets fulfilled completely, but it will get fulfilled at a large levels, anywhere from 60 to 70%, which tells us that those are going to be the profitable trades. We look at the percent fulfilled is 0.15, and then going down to the average profit is 29.81%. But if we look at the current average profit, it's 8%. On an average of the 65.66% that are currently long, there is still a 20% return. So this is telling us that there is a lot of upside in this market going forward. When you go around the internet, all you hear is the market's going to collapse, the next depression, we're in a depression, all those kind of things. And people are trying to justify the things that we're seeing in front of us right now. I'm data driven, and this is what these models are telling us. I have studied every day of this data since 1998. 22 years, this is what I have lived and breathed. Let's move on to the cash S&P. The momentum is starting to surge. We now have a PPM1 at 0.35, PPM2 0.26, and PPM3 0.13, but it is turning up. All of these are turning up. This is actually not how a market collapse or a top is going to form. This is not what it looks like. This configuration is telling us that markets are going to continue to grind higher. There's substantial support underneath this market, which is down at the 3280 level. You remember that number, I talked about it for weeks. Once we broke above that, that's going to be key support. On Sunday night, when the new market grid comes out, we'll actually have a better handle on what kind of range that we're likely to see. My estimates are that we're going to see a possible S2, that's 33.38, and a R1 33.54. That would be a new high. We printed 31.51, and there's a number on the weekly grid that is important. I'll show you in a minute, is 33.57. I mentioned that in a tweet that I did yesterday. This is the extreme projection for the week that came out last Sunday. So we fulfilled all the way to the extreme. As I've talked about, my expectation when we came into the week with all the news coming out, that it would be a very choppy, volatile week. Not what happened. It's been one-sided trade, been up every day, and the good news is the models have participated all along. I've talked a lot about this last trade that we had on the 3-2 model. This will also be in the WaveTech tool. You put SPY in there. Using the model 3.2 daily, you're going to have a similar signal around that 2840 level, so 284, something like that. But this pattern continues to grind higher. We're seeing the PPMs recycle. This market is going to continue to be very positive. we're only 1.5% off an all-time high. So the probability, we're going to move toward that number. There's no way that we're not going toward that number. We're not going to just end here and fall short. Maybe there'll be a bump against that number and folks will be talking about a double top, all kinds of things like that. But that doesn't appear to be what's in the cards right now. Looking at the weekly, you'll see on the grid over here, 33.57.32, the high yesterday, 33.51.03. See the futures over on the far right-hand side right now are down 9.25, but it's actually about 8 handles lower, so no big deal. We're slightly lower, and once these employment numbers come out in the morning, all bets are off on whatever's happening overnight. I suspect we're going to be somewhat muted coming into that number in the morning. I've been discussing this pattern throughout the week. We're printing up at the extreme. There will be a new market grid. It's likely to continue this upward slope. It doesn't look like we're going to get much of an expansion of the volatility range that this model is going to project going forward. So we're going to see this move up in this pattern most likely for several more weeks now that we've gotten over the magical 3280 number. Reviewing the NASDAQ futures, overnight the low has been 11,184. S2 is 11,191. We basically did the same thing in the E-minis. On the S&P, we printed an S2 low. These markets are likely trading in an S2 R1. In yesterday's action, we saw on the S&P, we saw an S2 and an RXT, which went to the extreme. If we did hit an R1, that would be 11,294. That's just a slightly new high. They get to that level, we'll probably continue to move up another 30, 40 handles toward this R2 number, which is 11,331. So we could end up with a S2 R2, and these numbers are going to match up with the S&P as well as in the NASDAQ. Next market we'll cover is the US dollar. I continue to see a bottoming pattern setting up in the Dow. You see that PPM1 is now cut through its first and second derivatives. PPM2 is starting a bottoming formation, but PPM3 has printing its lowest value, but it's not a material value, which is a minus 0.11. It takes a minus 0.25 or greater to have a longer term trend within this. And since we're not in a material or a trend level on PPM3, we're likely to see this thing continue to bottom here. PPM1 and 2 are going to be the guidance that we're going to look for. That should set up over the next several days. As we review the weekly dollar, we're seeing PPM1 turn up, but we're at a minus 55. This is a substantial amount of downward pressure. The current 10-week moving average is at 9,600. It's dropping at about 0.5% per week. So that number will come in over the next 2 weeks. 3 tops will be around 94, 94.50, likely where we're going to move up from this 92, 98 level, and we'll move into that 94 handle, 95, hit that resistance point, and then there'll be some consolidation around here. Well, I'm looking for a bottom here. It's a short-term bottom. It may end up to be a much more significant bottom, but it's too early to tell. Next market to review is gold. Gold has just screamed right through its extreme for the week. The RXT number on the grid is 2055. We've had a high of 2089. That number was printed in tonight's session. So we continue to punch out highs. There seems to be nothing to stop this market right now. And I've talked about this. The only thing that's easy to figure out is the support levels. And the market grid that I bring out on Sunday night's video, I'll continue to keep a close eye on the metals because these are significant. This isn't a runaway market, so it's going to be looking for something that would tell us at least a short-term or intermediate high is in place. But for the moment, everything is screaming. You see all the PPM1s, 1.68, 1.41 and 0.77. And those ppm stand for price pressure momentum. That measures the angle of attack of these moving averages. And at 1.67, it's substantially below where the market is this weekly, but that is telling us there is less than a 10% probability for the market to go under that. Of course, it's at 1847, but it's going to be jumping substantially, about $50 per week. And 3 weeks from now, that number being 1950 plus. So we'll have support right underneath the market. So where you're going to have to focus on is on the daily for any kind of short-term turnarounds and where the support is. You see the high tonight is 2089, and in the grid 2079 was R1, 2091. 20 is the R2 on the grid. You can see it trade through there. The RXT is 2113. 2102 is R3. Now it's possible we could see a surge. I think all the activity in all these markets, the sentiment for Friday is going to be dictated by the employment report and just what kind of rhetoric flowing around the street. Ultimately, you're going to have fiscal and monetary stimulus to hit this market. And there is a lot of folks talking about inflation, but that may not be what's driving this market right now. The final market we'll cover tonight is silver. We're trading 28.70. We're up 1.6%. The market grid, this is daily, has a R3 number, 2990 and a half. So far, 2991.50 has been the high. We're trading 2865. So we've reacted off of that number. And this will probably be the high of this session. As far as the trend goes, PPM1 is at 2.33. This is extremely robust. 2.05 on PPM2 and the bottom 1.34 on PPM3. This is about as strong as any trend gets. My expectation would be if we did close lower today, then we could set up a sideways pattern, and maybe that has everything to do with some of the activity that we're likely to see in the US Dow over the next several days. Reviewing the weekly chart, we just went straight through the RXT. It was 2709. I talked about that several sessions ago. Well, it just exploded. Now we've been as high as this 2191 that we printed tonight. We're well above that RXT number, the extreme at 2709. If we close above 2709 today, that's going to trigger a potential of 2 to 3 weeks of a downward sideways movement, and we'll come back into the grid. Now, when the grid gets updated after Friday's close, this is going to have much higher numbers. Depending where we close, there could be substantially higher projections on the upside. What's going to happen with silver and gold is we're going to have to look for some kind of reversal pattern. I'm looking for some type of climactic pattern here, but this thing may not be close. It's in a huge runaway, and we may not see that. I've seen a lot of folks on the channel talking about, gee, they're not letting us in. They really aren't. And that's this kind of market. So it's very difficult if you haven't been in to step into a market like this. Possibly you could use an hourly graph or some shorter term chart. If you're in it, enjoy it. I wouldn't get out of it. I would stay with it. I'd let this thing consolidate up here and see what the next patterns are likely to be going forward. This will complete the video tonight. Thank you so much for your patience last night on a glitch on the audio. I got it fixed before the open, so that was good. But have a wonderful weekend, and I will talk to you on Sunday night. Thanks a lot.